Ryan Hanley on the Attachment Point News Roundtable. Excited to get in some Buffalo Bills football, some next generation agency ideas to welcome the man back. Twitter hasn't been the same without you, Ryan. Appreciate you being in the fold. How are you, sir?
Oh, it's good to be back, man. I appreciate it. It's been 9 months kind of looking on the outside, and I guess I'm only back in the insurance industry by saying so, but saying so has been fun, and just re-engaging has been a lot of fun as well. So
it's like Jay-Z or Dr. Dre. You know, he retired after the Black Album, and then just back. Yeah.
Just got to come back.
Yeah, the people requested it.
It's like a weird calling to want to come back, but I had it, and I've been watching from the outside for a while. So, and it's not like I just stepped away. My wife still owns an agency. I still help her and talk to her and her family every single day about what's going on. So I've stayed very close, even though I haven't been, creating or engaging in the conversations as much.
And I kind of want to riff on your broadcast yesterday, because I feel like a lot of people are going to click on here, probably are watching your YouTube live, which was really interesting. A lot of what you're talking about, how agencies are changing, it's no longer like top down. It's not like the information resources are so hard to get to that somebody can't stand something up. I was thinking of a great example of Jill McCowan from Apex Insurance out of Georgia with her brand around kind of motorsports and everything else, and having that niche. She's killing it. I stood up an agency, you don't know what you don't know, and I ended up working with my buddy to flesh out a few other things, but I cut a wild hair, and $1,000 later and a couple contracts, I was able to sell insurance,
Yeah.
Part of that sounds scary, part of that's exciting, but yeah, I agree, man. I think going forward, we're not going to be beholden to bosses kind of like we used to be. It's going to be a little bit more of a partnership.
Yeah. And in the, the live broadcast that I did on YouTube the other day, which was really fun. I had over 100 people show up, which was awesome.
Right. Yeah.
That was a lot of fun. The idea that I was talking about there was this concept that I actually got from Nancy Duarte, who is one of the premier speaking, we'll say coaching. She's coaching business, but it's presentation design, communication design. It's a lot more than just like a speaker coach. She's phenomenal. And one of the core values of her business is she allows her employees to build a body of work. And in the podcast that I did with her for my own show, it was something that I really wanted to dive into, because that is I think, rare idea for a leader to want their staff to have their own body of work that I'm sure intertwines a little with her own brand, Duarte, but ultimately is building that individual's own brand. And certainly in the insurance industry, that's a foreign concept. I know a lot of people who I met, first timers at different conferences and stuff, who were like, man, I've wanted to come to a conference for years, but my boss was always afraid that I'd get, plucked away, or that and that type of scarcity mindset is what's kept this, very, I think, toxic hierarchical nature to our organizations. And not that I don't believe in hierarchies, I do, but when it's do what I say and do it because it's what we've always done, and do it always in the best interest of this organization, at the expense of your own career, that I think is gone. Because what's been proved too often, too many times, certainly in our generation, is that you cannot trust the company that you work for. You can't.
Well,
it just, they could be your best friend, and at the end of the day, not that you have to be in charge. That's not what I mean. And I also don't mean that you have to have ownership, but you do. And I firmly believe this, you do have to have ownership of your own personal brand. And that's really what I'm talking about, is that the only thing that's allowed me to sustain through the last year and a half. I mean, take my own career, man. Like, I've been fired twice in the last 18 months and kind of mutually left a company that wasn't a great fit. So, you know what I mean? Like 18 months ago, August of 2018, I guess it was, I I got fired by Trusted Choice.
Mm.
I go to Bold Penguin, which was a great company and still is, but it just wasn't a great fit for me for a bunch of different reasons. A lot of that having to do with, me not being able or willing to move to Columbus, Ohio, which is no fault of anyone's involved. We tried. That didn't work. And then I went and worked for a local company outside of our industry that, again, I was then now the CEO of and got fired from that company. So, at a certain point, and my point in saying all that is if I hadn't built a strong personal brand, if I hadn't stood for something beyond just the company that I was working for consistently throughout that time, then I would never have been able to move through that journey without falling flat on my face. And that, I guess, is what I'm getting at, is that as employees or staff members or team members, we need to start to take ownership of our personal brand and build our kind of body of work. And as employers who want to keep their top talent, I think providing a venue for them to build their own body of work is the best way to endear them long-term to your organization. That's what I'm saying.
I 100% agree. I have a producer buddy who's getting into issues with the owner of the agency because of like who would own the YouTube channel they want to build out for a specific niche. And I'm like, that is so dumb. Like, especially if you want to take over the agency at some point, he can't get in the way of you building clout to be able to do that and buy him out. Like, I feel like my friend's just getting pigeonholed as like a glorified account manager with no leverage. It's tough to watch. And I just mentioned this. It is interesting, like getting fired or leaving a job is a tough thing. I finally admitted to Bobby from Ben Akiva the other day on a pod, but I was at like a leads company. It wasn't great. It wasn't expected. I got recruited to a company by a good friend and let go in under 3 months. And it wasn't what I expected. And that's really what kind of pissed me off and put a fire in my belly. And that's what made me flip broker Brett back on. I had his broker gizmos for a little bit and just try to go out on my own. It's rough, when you get kind of released in the wild, especially, being relatively newly married and all that, being the one handling the benefits. It's kind of a little bit of a punch in the jaw. And if it wasn't for my LinkedIn, if it wasn't for my own brand, I don't think I could have explored this route in the same way where I'm helping my friend's benefits agency with PNC. I'm helping a startup, Fineo, which has been awesome. Their marketing guy loves you, David. My buddy, he's like, Ryan Hanley kills it. He makes great content. So he wants to meet at some point. And then I still have my wedge for my personal lines agency, but it was all built out of having my own brand, controlling my own LinkedIn, realizing I always called it like an Oklahoma land grab. I made LinkedIn look good like 5 years ago before it mattered. And now just in the past year or two, I think it starts to matter.
Yeah.
I totally agree, man. You have to have your own locus, your own opinion, be your own person. And especially with the world changing, I don't know why an agency owner wouldn't want 5 different branches out there, 5 different arms, 5 different test plans.
That answer is super easy. Yeah. It's all ego. The ego of leadership, and in particular, I think legacy traditional leadership is it's very tough to overcome. And I think one of the things that say the baby boomer and some of the older Gen Zs really struggle with millennials and anyone in the younger, and I hate to use the term millennial even, but just younger generations is, I think the younger generations are slightly less egotistical. They're more open. They're more engaging. They're interested more in things like, I want to be able to pick, one of the things with this podcast and scheduling this podcast is I told you that at 2:53, I need to be gone because it takes me 7 minutes to go to my kid's school and pick them up. And that's very important to me today. That's cool. And those kind of things, I think it's tough because the old school mentality was like you had to earn it. And I just simply don't believe that. I believe that if you put in that is a very relative, let me put it this way. That is a very relative idea, earning something. I don't think that it has the kind of, well, if you haven't put 20 years in, then you don't deserve this. Or, everyone has this arbitrary number in their head and what that means earning it. And I don't know that that's actually true because I don't think I think that there was a time when everybody kind of wanted the same thing, right?
Mm-hmm.
Everyone went to a company, you worked hard, you got as high as you could, and then you just worked in that position until you retired, and then it was all good. And then 2000 happened, and
Mm-hmm.
then 2007, 2008 happened. And, and it's not like anything has really changed. Yes, the economy is better, but it's not like stability has come back into
Yeah.
our job force. And, I look at that, I look at my own career, like, um,
Kind of.
talk, it's very difficult to stay with one company for a long time. And I actually don't think, I think the mentality should be that that's not actually the goal. The
Mm-hmm.
goal shouldn't be that that the the people that you hire are going to be with you for 20 years. It would be amazing if they were great fits and they weren't.
Mm-hmm.
But I think it's time that we start thinking about the people who we hire as, I'm going to bring this person in, and what I'm going to try to get is the best I can get out of them for the period of time that it makes sense for them to be part of our organization, at which point they're going to go on to something else. And that will be amazing, because I will have now created a great relationship, a great contact, who is now with someone else that I
Mm-hmm.
can, and then you backfill. And I'm a little preachy here, but
No, I like it.
I think the reason that this mentality is so hard for many leaders to grab onto is they don't want to have to do the work of mentorship. They say they want to mentor people. Everybody says, yeah, I'd love to mentor someone, or, oh, but no one really wants to do that hard work, because it involves tough conversations.
Mm-hmm.
It involves following up. It involves, really diving into why someone is doing something the way they're doing it. Why, you know what I mean? And oftentimes, you're brushing up against each other. You're really, you're grinding on each other a little bit. But I think the finished product of that is someone who believes in your business, whether they work there or not, someone who is committed to your business's success, whether they work there or not. And ultimately, the more positive experiences that you can provide to people who then propagate your ecosystem, who move on to other opportunities, that's a win. That's in a very abundance mindset mentality. And this whole idea that I'm going to train my competitors, that's only going to happen if you treat those people like shit.
Yeah.
Like, right? They're not going to want to come after you. Like, if you hire a good person and you treat them well, they are not going to go start an agency down the street and come after your business. That's just not going to happen. That's not
I
how
think
good people operate.
I'm hearing scarcity mindset, and we got to flip it to abundance mindset, because it's no longer a main street with a limited number of clients.
Yeah.
I mean, I'm speaking from a problem of plenty. I'm in Orange County. I can go to LA. I can go San Diego pretty easily. But I just think with smart, kind of tech-driven programs, your reach can be phenomenal.
Yeah.
And there's no reason to be scared of enabling people. I do think my buddy Blake, who I'm helping out his benefits agencies, like, I totally make people partners, but like you said, you got to have stuff in writing. He's like, I'd rather bring people on and kind of win together. I do 100% agree. I kind of want to hit a random side tangent.
Yeah.
Part of how I ended up in insurance full time, my dad was a top salesman for a moving company for 30 years. And he was supposed to buy it and ended up selling to somebody else because they can make a little more money. And when I saw the writing on the wall, I jumped out into insurance, because I already had my license to be able to figure out where the moves were going to be. But you never know unless something's in writing, unless you have a contract. It's tough, People can
Yeah.
string you along, and then
That was
you're gonna
the
make their
advice that
decision.
I just gave
Yeah.
that advice to someone the other day who I was talking to. I basically said, unless you own it,
Mm-hmm.
or your exit is in writing, it does not exist.
Yep. It's so
And
hard. Yep.
I talked a little bit about this on the live stream, but I literally had a conversation with someone who was was asking me questions about an opportunity. And my advice to them was, like, if your exit isn't in writing, how this thing dissolves,
Mm-hmm.
your employment there, if it's not in writing, then you have
Yep.
nothing.
Yep.
You have no, the number of handshake agreements or I'll take care of yous that have fallen apart and created bad blood between people who used to really care about each other, because they never wanted to actually sit down and hammer out what the details of their
Mm-hmm.
relationship were. I think that that's a poor decision. I certainly think that staff level members need to be particularly careful of any type of handshake agreement or verbal commitment. It doesn't mean anything in the court of law, really. And, you know, I don't care if it's your father or your uncle or your best friend, things change. Life happens. Someone, someone has you don't know, someone may have a gambling problem. They own a ton of money. And now that piece of equity they were going to give to you, they need that to go pay off their bookie. I mean, this stuff happens.
You know what I mean? Don't know the background influences, and there's so many people involved in any decision, and human
Yeah.
beings are incredibly good at rationalizing things to themselves if they got to go one direction or another. It's just
100%.
tough. It's how the world works,
Yeah.
Yeah, 34, and I think that's part of surviving 10 years of sales. You just kind of see that things are what they are. But on the flip side of that, if you can have those bold, tough conversations, if you could justify what you need, if you can say, hey, I'm doing X, I would like see, it can be really cool. You just can't be afraid to really take a hard look at what you're contributing and the value,
100%.
Yeah.
100%. I think that I am not advocating for everyone owning their own agency or everyone owning their own business or everyone having to have a piece of equity in a business.
No,
there are many different ways that people can be compensated, whether it's time off, whether it's a variable schedule, whether it's work from home, whether it's phantom equity. There are a myriad of different ways that people can be compensated for their contribution to a company. And all I'm advocating for is that more employees spend time thinking about what their contract actually is, and that things happen, life changes. And I actually think when you sit down and you have these tough conversations and you really know, you have a clear, defined understanding of, if I do X, here is what I get. Here's what Y looks like. And if there's ever a point where we're unhappy with this relationship, we can take this path and everyone moves on to the next. That to me provides an environment in which everyone can actually operate fully aligned.
Yeah,
because now we know what the rules of the game are, right? There's no questioning, oh, well, I've worked here for 20 years, but Steve, the owner's got a kid who's been in the business for 2 years, and he's probably going to get it, and I'm going to get nothing. So now I'm going to start to not work as hard because I know and then you're like, then it creates all this weird dynamic instead of just planning these things out.
Oh, I think that clarity too gives you a reason to have skin in the game, gives you a reason to work hard, a sense of ownership. And the other reason why I think we have to work together is just higher upside. If I have to be the sole guy, if I need to have people working under me, I'm limited. I know what I'm good at. I know what I'm not good for the most part. I'm a good pace setter. I'm a good energy guy. I'm a good, do all right with marketing, getting our name out there. I'm not great at holding people accountable. I'd probably give away my own agency too fast. Here's all the equity to everybody. I know I need somebody behind me who's keeping people honest, who can see things as they should be, like a little bit of a bulldog counterpart, and I just know you find the right people to work with, it can get a lot bigger than if you try to be the end all be all, at least from my perspective.
I'm with you. Yeah. I mean, that's what the guys from GNN, Zach Matt are preaching, Cass is preaching that, Nick Ayers. I mean, there's a lot of people who are starting to preach something that, I've been talking about this for probably a decade now. One of the very first things that I started to realize about the insurance business. So the first thing that I realized about the insurance business when I first started speaking in the insurance business about 10 years ago was that everyone wanted to hear about marketing stuff, but no one actually put it into practice. And it took me about 2 years of, going through the circuit and talking to different organizations. And then all of a sudden you start to hit the circuit a second and a third time. And you're like, wait a minute, like we've already talked about this stuff. Why aren't people moving forward? And the answer is, I think most of the people who start insurance agencies because they're insurance agents, not business people. And I don't mean that in a negative connotation. I mean it from a mindset perspective. They like to engage with people. They like to sell. They like the product. They like the lifestyle of, I show up, I have things to do. I dive deep into coverage and I provide that coverage to my clients, and I'm doing it. And that's amazing that these agency owners love to do that work. I mean, God bless them. It's the work. It is the job. The issue is that stops working as well as the business starts to get bigger. What the business needs is someone who is thinking about it like a business, not like an insurance agent. And like you, and as you said, in order to do that, you have to be able to step back. If what I hear you saying is you love doing insurance work and maybe some of the other stuff, and what you really need is like a solid COO or ops manager who can be that person who's going to handle accounting, handle the various other facets of the business that go into making the business operate. That's part of thinking like a business owner. It doesn't mean you don't sell insurance. If that's what you love, that's where you need to be. It just means having the mindset of a business person and thinking more broadly about the business and filling the gaps that you aren't good at. And I don't think that that's as heavy a lift as a lot of agency owners make it out to be. It's certainly not easy. I'm not trying to diminish what I'm asking people to do. It's expense. And if you are an agency owner who thinks about your revenue as, essentially your personal, every dollar is out of your pocket. I've heard that saying quite a bit. I hate that saying. Then paying $60,000 for an ops manager who's going to come in and just make sure the daily flow of the agency works to free you up, that feels like a heavy expense. That's $60,000 kind of out of your pocket. But, that ultimately done right will absolutely positively pay off over the long term, because you can spend more time on the things that you want to do. It frees you up from a lifestyle perspective, from just a mental, less stress. You have someone who's thinking about accounting and communications and technology and the filing system and who requested Friday off and all these things that you have to think about. And that I think that's a big part of the issue, is we're still stuck in insurance agent mode and not agency owner mode. And the more agents that are willing to take that step and backfill where their weaknesses with, either humans or technology, I think it just helps everybody. It creates a better lifestyle. It creates a more efficient business, hopefully a more profitable business. And ultimately, I think it sets that agency up for the longevity and the, I want to use the right word here. I think we have some tough times coming. I think, I am not an economist by any regard, but in the small amount of reading and following that I do, it feels very much like we're being set up for something to happen. And when that does, the businesses who have properly positioned themselves to weather these types of storms are the ones that are going to survive. And by survive, I don't mean be obliterated. I just mean become obscure.
It's interesting though. 34 now, graduated college in 2009, worked for construction for a year, tried to sell copiers during the Great Recession. It's interesting when you've been through a cycle or two, when you've seen it up, you've seen it down to a small degree, and you just kind of learn how to stay on the fundamentals. For myself, I've been licensed for a few years, but only full-time-ish around insurance for about 2.5 years. I just think it's so important. I love the tech stuff. I love helping Fineo. I think the fintech stuff is so interesting, but you have to know how to transact the policies. You have to know the accords. You have to know how hard it is to get somebody to deal with the paperwork of insurance, just from an inertia standpoint. I think to be really effective in this tech ecosystem, you got to understand where we're coming from, and that was the big thing I was talking with Bobby about too from Ben Akiva. I don't know. I think I'm most effective and most helpful by trying to understand the tech and by still cold calling, because I get to see what it's like on the ground and what technology matters. I do think from a platform and technology play, things like CoverWallet are super interesting. And I bring them up all the time, zero association with them. I've written some business through the platform, but those tools that make it simpler and quicker for us to deliver A-rated paper, I think are going to be the new norm. They're going to be able to handle more and more complex accounts. So I think there'll be slightly fewer of us, but I think we'll be able to do more in the not too distant
Did you
future.
say you have written a few policies through their platform?
Yep.
What did you think?
It's cool. You could basically have it set up on a phone call. I have written some like Hippo on some inbound calls too. It's interesting. There's certain platforms you can handle in real time. And you may not bind it on that first call, but you can at least get a rate, at least get to a point where you can review it, make sure you like the policy, and then email them a couple minutes later. But, traditional Accord form supplementals, sending them into a GA, like, you're not going to be able to have that kind of real-time interaction on a policy you don't want to spend that much time on, just from a
Yeah.
cost-benefit standpoint anyways. Don't get me wrong, I'm definitely handling ugly duckling accounts right now. I get all the weird stuff nobody wants to work on. They flip it over to me, like land that's leased for CVS in Texas or something, but it's like so obscure, everything right now. Yeah,
no, I
like,
feel that. I think just to reiterate what you're saying, part of what I hear you say and I agree with is no one has created a killer app yet. You still have to do the work. That being said, the consumer has changed, and they just expect easier and faster. I don't think they expect easy, fast, and now. I think they expect easier and faster. That's my personal opinion. I've spent a lot of time, actually, I was talking to my wife a lot about that. She writes an incredible amount of personal lines. And if you were to look at their tech stack, it's like something from 2013.
Yeah.
But they write an incredible amount of personal lines, and they do a very good job, and they have a very high retention rate. And a lot of that is just because they know what they're doing. But she will tell you and be the first one to tell you that if you're not easier and faster, price becomes more of an issue. So this is an interesting thing that she shared with me the other day that, I think it's interesting to share with your audience is like, when she can get someone on the phone and talk through the policy with them, and if she can make it easier and faster to get done, they're more likely to listen to her advice and take the, what we would call a proper policy versus just, give me the lowest thing and the cheapest thing or whatever, right? We've all heard that. And the transaction usually goes pretty well. When the longer that process takes, the more conversations they need to have back and forth, the more emails or whatever that go back and forth, the more that person becomes price conscious. The more they're just like, well, just give me the lowest number and let's get through this. So it's almost like we're on the clock, right? If you can deliver max value at point of, at first conversation, then and get them to point of sale in that moment, there's a good chance, especially on maybe smaller commercial and personal lines, where that's going to happen. And the longer that process takes, the more forms they have to fill out, the more back and forth you have to have with them, the more that process starts to feel like a burden and they become more price conscious. So I think that while there's not a killer app, tools like Cover Wallet, tools like Hippo, I know Bold Penguin is doing some things with agents now. These kind of tools I think are very much going to be the future of our business. I do think, and I've actually closed the live stream that I did yesterday with this idea, is I just want to caution everyone who's listening and believes anything that I'm saying. I want to caution them about completely removing humanity from the equation. I think that the independent agent does become a commodity when you're completely remove the human from the equation. I believe that there is still a very large subset of the population, the majority subset of the population that wants a human involved in the transaction. And we just have to remember that needs to be there. It just has to be, we have to be optimized. We can't be a friction point. We need to be a facilitator.
Well,
yeah.
I want to say it's Peter Thiel from Palantir that got drawn out of PayPal. So what they realized is they could only automate fraud detection so far, and that you need human eyes to sift through the last sort of 10% of it. Yeah. And that's the whole presence behind Palantir, which has all the crazy government contracts, whatever else, to sift through enormous amounts of data. They still think you need butts in the seats to kind of have eyeballs on it, in the red zone. Now we can transition to Buffalo Bills football, when it gets to the most important part. You need that human interaction. But I do think there's going to be data scraping, machine learning to pull up information quicker, make apps easier, have the relevant information at your fingertips as opposed to the web. I don't know. It's interesting. Even that policy I was working on today that I ran a little late hopping on this pod because my buddy's like, hey, work on this workers' comp for me. Still going to the website, copy and paste in, whatever else, looking for things on Manta. I think in the future, a lot of that will be done for us and we'll appraise the risk as opposed to doing the data search,
Yeah, I hope so. I hope you're right about that. The thing that, someone made a joke online about, does InsurTech really need like another universal wallet startup in it or whatever? And I think, one thing that I think is really interesting, is I don't know that there will ever be a universal answer. Like everyone wants a universal collection point for data, a universal pricing tool, universal and I just don't know that we're ever going to have that. And, I think it's really hard to mash take like, Hartford has a small business quoting tool, right? And it's actually super efficient. It's fairly easy to work through.
It's good. Yeah, I like that.
It's
one
good.
a lot. Yeah.
Except the only quote you get is Hartford, right? Yeah. So you still have to have a human being know that Hartford is the best. Otherwise, you're going through this whole web portal entry system and getting a Hartford quote. And if it's not the right, just wasted that time.
And they wait till the end to tell you it doesn't work because they want the data. They don't want to kick you out early. They want
exactly. And Chubb does the same exact thing, right? Like Chubb does the same thing. Like they have their small business portal. Yeah. And God bless them for building technology that helps their commercial agents write more of their insurance, but nothing has really changed. Like still, you have to go to a portal, stick in all this information and get just a Chubb quote. So, there will always be ways to leverage humans, their experience, and just the natural connection I think that we need with each other. And in that way, even if insurance agents are just like influencers to a certain extent someday, and it's actually not a bad model to really think about. I was thinking about this, and this is probably tangential or just more interesting in terms of where my brain goes. But like, I was looking at cameras because I want to buy a new DSLR, and I don't need a human being to purchase a DSLR. I just don't. I've purchased quite a few now, and I can do the entire transaction on Amazon without a single person. That being said, I would never go to Amazon and just purchase a DSLR camera without listening to, Peter McKinnon and Matty H from his buddy there and Jared Polin, and then a bunch of random, Instagram influencers scrolling through, searching Canon, searching Sony. Like, I need those human beings to show me what they're able to do with it, to hear their reviews. I watch countless YouTube videos. So I need them to purchase this product, which can be purchased, with like 3 clicks, right? Like Sony, Amazon, Sony, click, done, 1 click buy, it's mine. But I would never actually do that.
And what's the price point on that camera, if you don't mind asking? Because I heard Thomas from BrokerLift say anything under $400 personal lines or $1,200 commercial, they can maybe automate. But I think at a certain point too, when you get to a certain dollar amount, you want people involved,
Yeah, so that's probably about a $1,500 to $2,000 purchase. I would agree that things like pet insurance, monoline umbrella, really small term life insurance policies, those can probably be automated
or maybe
online.
Renters,
right?
but not, But even then, like, you want to have that personal liability. There's stuff people are going to miss. Like, as an agent, I would like to set the benchmarks for anything that's automated so they can't go below it. I was joking around calling it guardrails. And if you want to go below a 50, 150, you have to call me or we have to email about it so I can explain why I don't think it's a good idea. That's my 2 cents on what the automated stuff should have is the agent should be able to set the limits they want it to go down to. I don't want a bunch of BS policies out there that are going to blow up. And
exactly. And you need to be careful with that kind of stuff. So, I think just like all things, the future is very interesting, very dynamic, and you know, I am hopefully, very hopefully, optimistic that, you know, independent agents are going to make a strong resurgence
Hmm.
in the marketplace. Not that they ever really went away, but we certainly have taken our punches. Um, and I'm hoping, you know, that with all the new podcasts, with all the work
Hmm.
that, you know, guys like you are doing, and there's so many more individuals kind of voicing these types of thoughts today than when I first got involved in the
Oh yeah.
industry. That, you know, we're going to hit a groundswell pretty soon where the things that we've been talking about for the last 6 months, or I guess not for me the last 6 months, but, you know, for the last maybe 6 years, 5 years, we'll start to hit a groundswell and we'll start to really push forward. I think we're close. Um, I think that the pendulum may have swung for a certain period of time far too far to automation and,
Hmm.
you know, nothing but paid ads and all that kind of stuff. And not that that stuff isn't great, but the answer is usually in the middle.
Hmm.
And
I
I think
100%
that's
agree.
where a lot of my work moving forward is going to be focused on, is how do we balance the human side of insurance with the very important technology and automated side.
And I just want to kind of going back to your talk yesterday real quick. I think I don't want to say dirty little secret is I pay attention to insurance, but not a ton. Like I pay attention to fintech as well. I pay attention to some marketing stuff. Like I pay attention to sales books and sales podcasts. You were saying yesterday, like, was it Danny Kimball? She came in from the outside. She was teaching dance before.
Yeah.
I was around office relocations. I think pulling in other types of talent
Yeah.
is going to be hugely helpful. And I think seeing what's worked in other industries and then swinging it over is good. Um, if you're in your own silo, you're going to get more of what you've got, what you've had, So I think just
Yeah.
2 cents, listen to different things.
Yeah. I
Yeah.
mean, that's why
Yeah.
that point, I think it was number 4, was like hire people, not
Yeah.
positions. And, you know,
Hmm.
Danny is just one, you know, very good example of, you know, a former dance teacher and professional dancer
Hmm.
who is now, you know, doing an incredible job as, I think she's the CMO. If not, she's the head of marketing for the
Yeah.
O'Neill Insurance Group. And she absolutely crushes it. She's setting the bar and she's growing that business, and she's
Hmm.
got them, you know, having conversations with um, businesses and individuals that they hadn't reached before.
Hmm.
And you would have never picked her to be, you know, out of a lineup. You would have never said, you know, dance teacher equals high quality insurance professional. But yet that's the case. So I'm hoping we look outside of our space. We're so
Hmm.
insulated. And while, you know, they're part of the nature of our business is to stay insulated, because it is unique in some ways,
Oh
in some
yeah.
very
It's
specific
hard to
ways.
comprehend.
Yeah. You know, half the people that sell insurance don't even know what they're talking about. But um, you know, I do think that it is the role of certain individuals and organizations, I would consider myself part of that, to pull in ideas from people outside of the space and
Hmm.
and 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 just say, hey, here's something that's working over here.
Yep.
Maybe it can work for you, maybe not, but it's interesting and it's worth considering. And if the consideration is no more than, hey, that doesn't work, then that's fine. But to not know what's going on in other spaces, or what's possible, or what's happening, or what the benchmarks are in other spaces, I think is a detriment to our long-term
Or
success.
even in other verticals within insurance. And I'm watching our clock. We got a couple more minutes. We'll get you out of here
Yeah,
next
we're
like
good.
5. So Fineo's building a marketplace, a platform to deliver term, critical illness, and disability with single set of questions and delivery, almost like an Amazon cart.
Yep.
Cover wallet. We don't have it in financial planning related insurance yet. So by me having the PNC experience, seeing the opportunity they had, I was like, duh, like, please let me help you guys out with this. So even just being willing to touch other departments, or even
Yep.
like my friend Blake is really good at benefits. And really, he just brings in a great tech suite to small businesses that aren't usually offered these cool tools. Usually they're more middle market, HRIS systems, learning centers, these little 15-person companies like, we're a small business, you're offering this to us? We're like, yeah, oh yeah, we're offering it to you. Um, but just seeing how he's won business with cool tech tools. He's like, I'm not even a benefits guy anymore. I'm a technology distributor. Um, I haven't seen how that's going to play out in P&C yet, but it's just interesting to chew on, where maybe we become more risk managers later than, marketing. I almost feel like the insurance agent of the future is going to be like a marketing rep, what we think of today. They could bring knowledge, they could bring awareness, they can bring a product, but they're not going to have to do as much paper shuffling.
Yeah. The hard part about that, I think what has been the P&C's what has been the P&C industry's most calming factor and the governor to rapid growth is what I've been doing a lot of research on lately, which is the principal agent problem between carriers and agencies.
Okay.
Is that in order to deliver a product like that to the market, which could actively allow agents and their clients to move through a process that fast, you really need to be directly connected into a carrier. Very few carriers are willing to direct connect into any system, and the agent is always going to take the path of least resistance, always, because otherwise they're not optimizing their own business. You know what I mean? To use a system to work with a carrier who is harder to deal with and takes longer doesn't make any sense today. It makes
no sense. Move it
sense.
off the table, move on to the next thing. There's always 4 things stacked up.
Exactly.
Yeah.
And the carriers are going, well, we have a superior product or we have superior pricing. It's like, yeah, that's great, except I have a business to run too. The quotes that come in that fit your appetite aren't the only quotes that I have to handle in a single day. And therefore, if you're going to drag on my performance, then I have to shuffle you to the back of the line. And I think carriers are starting to get that. It feels like, you have the big players, the Travelers, the Hartfords, Chubbs, those guys that are obviously doing that. But, you just have to be careful with those companies. The mutuals and some of these really strong independent mutual players, they're starting to get into the game, and I would love to see them move faster. I would love to see them really think. I would love to see, I guess, so I've spoken to a lot of these organizations, and my takeaway is always they're doing the best they can, operating under the assumptions that they have to do things the way they've always done them. And I would love to see some of these organizations spin off, start to operate maybe like larger tech organizations where they're thinking spin off some startup underwriting practices, spin up some startup companies, really take and deploy their capital into test organizations and allow them to blow up if they do, allow them to blow up and find the winners. Because I feel like right now we're only trying to place our bets on the sure things, and just no one has any idea who those are going to be.
They got to think more like VCs and less like insurance companies.
Yeah. I mean, think about everyone who invested time and energy into Tech Canary. I mean, you're kind of in trouble now. I mean, they just came out with an announcement that they're not even really doing updates anymore. 3 updates a year? I mean,
I tried to reach out when I was doing my own thing. They said that I didn't have enough seats.
Yeah. So it's, I think that, and I get it. It's just, it's really tough to pick the winners. And, this is a bold statement from someone who isn't running a, $600 million insurance carrier. But I do think that it's time for them to start placing more bets, letting the losers blow up and just waiting, that venture capital mentality of my one winner is going to pay for my 19 losers.
And we're not saying angel investing where it's 1 out of 100. We're talking 1 out of 10, 1 out of 20. We're not saying you have to choose a huge portfolio. Just have a couple companies you want to nurture.
Yeah. So I think that's, and maybe we'll see some of that. I mean, I know that people who think that way and follow those worlds are in some of those companies and are doing good work. So, it'll happen. But I guess my general sense is I'm glad to be back thinking about these kind of things and having conversations like this one.
Well, welcome back, man. Let's wrap it here, but let's do it again sometime. I appreciate you taking the time, sir.
Absolutely. You know, I'd say anyone who's interested in just finding out more about what I'm doing,
Hmm.
you know, go to ryanhanley.com. That's where I'm creating everything today. I'm spinning up like a true business site that will have
Mm.
more of like the services that my company Hanley Media is going to be offering. That will be up soon, but just go to ryanhanley.com for now. Connect with me on social, and you know, that's the best place. But I appreciate you, man. Thank you so
Yeah,
much.
no, good stuff, man. Looking forward to continuing the conversation. And till next time, guys. Thank you.
Yeah, be good.